Okay, hi everyone, and welcome to today's webinar. So for today's session, we are going to be talking about pivot point trading strategies. This should be quite a quick session, so we'll leave some time at the end to go through a couple of live analysis. So later on, if you guys have any requests, feel free to pop them into the chat. For now, we'll give about 2 more minutes to let more people join our session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me clearly, and can see my slides as well. And yeah, we'll begin in about 2 more minutes. Thanks, everyone. Okay, let's go ahead and get started. So as per usual, a disclaimer, and risk warning. The information is not considered as investment advice or recommendation, but instead a marketing communication. A risk warning: our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So in previous webinars, we kind of talked about the different indicators that you guys like to use. So pivot points are just kind of one of them that we are going to go through today. So this is our agenda for today. We're going to look at what exactly are pivot points, the different types of pivot points, what timeframes you should use, and how you can add them to your strategy. Okay, firstly, what is pivot point trading? So pivot point is basically the level at which the market direction changes for the day. So it uses some simple arithmetic and the previous day's highs, lows, and close, and that's how the points are derived. So these points can be used as critical support and resistance levels. The pivot level, the support and resistance levels calculated from that are known as the pivot levels. So this indicator, the pivot point indicator, is typically predictive instead of lagging, since it uses information from the previous day um, um, to calculate potential turning points. Okay, let's continue. So there are a couple of basic steps to implementing this indicator. Okay, firstly, you calculate the pivot point. So it's calculated as the average of the previous day's high, low, and close prices. Um, Secondly, you calculate support and resistance levels. So once the pivot point is determined, you can calculate the support and resistance levels based on the pivot point and the previous day's price action. So the first support level is calculated as twice the pivot point minus the previous day's high. The first resistance level is calculated as 2 times the pivot point minus the previous day's low. The second support and resistance levels are calculated by adding or subtracting the difference between the previous day's highs and lows to or from the pivot point. And lastly, you use the levels as entry and exit points. So once the um, support and resistance levels are calculated, you can use them as entry and exit trades or points for your trades. So for example, if the market is approaching a support level, you might consider buying. And if it's approaching a resistance level, you might consider selling. So normally, depending on what software you're using to trade, like MT4 or TradingView, these levels are calculated for you. This is kind of just the background on how these pivot levels are calculated. But it's important to note as well that pivot point trading is, of course, as we mentioned earlier, one strategy amongst many. So we normally will use pivot points kind of as um, a confirmation of our pre-existing support and resistance levels that we do way before we even implement all the indicators. So I'll show you a bit what I mean during our live analysis session. Okay, so there are a couple of different pivot point trading methods. So the main differences between them include, firstly, the standard pivot points. So this method involves using a simple calculation to determine the pivot points. So that's just the average of the high, low, and closing prices from the previous trading session. So the support and resistance levels here are then calculated based on that pivot point. Next, we have the Fibonacci pivot points. So this method uses, I'm kind of jumping to number 4 here, but this method uses Fibonacci retracements to determine the pivot point and support and resistance levels. So the pivot point is calculated by taking the average of um, the low, and closing prices, and then adding or subtracting a Fibonacci retracement level from the pivot point to determine your support and resistance levels. Okay, let's go back to point number 2, which is Woody pivot point. So this method uses a pretty similar calculation to number 1, the standard pivot point, but it has a different weighting of the high, low, and closing prices. So the support and resistance levels are calculated based on the pivot point with additional levels of support and resistance added based on the difference between the pivot point and the high, low, and closing prices. Number 3 is the Camarilla pivot point. So this method is based on quite a complex calculation that involves using multiple levels of support and resistance. So the formula for using the Camarilla pivot point includes 4 support levels, 4 resistance levels, and the pivot point itself. And lastly, number 5, the Demark pivot point. This method also uses a pretty complex calculation, but the calculations basically take into account the relationship between the previous trading session's high, low, and closing prices, as well as the current trading session's open price. So now let's kind of go through some of the pros and cons of using the different pivot points. So firstly, we have the standard pivot point. This is the most widely used pivot point method. It's easy to calculate and understand, provides a good overall picture of support and resistance levels. Some cons is that it might not work well in volatile markets, and it doesn't take into account the opening price, which may be significant in some markets. It can also be less accurate than other methods um, in certain market conditions. Okay, next let's look at the Woody pivot point. So this is quite popular with short-term traders. It uses the current period's opening price, which can be significant in some markets, and it provides more weight to recent price movements. Cons is that it's less used compared to the other methods. It's less effective for longer term trading, and it may not work well in markets with lower liquidity. Okay, next let's look at the Camarilla pivot point. So this is quite popular amongst day traders, and provides more support and resistance levels compared to the other methods. Um, it can be used to identify potential breakout levels as well. Some cons is that it can be complex to calculate and understand, might not work well in markets with lower liquidity, and may require more frequent adjustments compared to other methods. Okay, Fibonacci pivot point. So this uses Fibonacci retracement levels to identify support and resistance levels. So it can be effective in trending markets and can be used in conjunction with other Fibonacci tools as well. Cons is that it might not be effective in volatile markets, might not work well in markets with lower liquidity, and it can be less accurate than other methods in certain market conditions. And the DeMark pivot point. So this is quite popular amongst institutional traders. It can be used to identify potential trend reversals, provides multiple levels of support and resistance. Cons is that it can be difficult to calculate and understand, may require more frequent adjustments. And again, since it's often used by institutional traders, it might not work well in markets with lower liquidity. So overall, some of the strengths, just to generalize, on most of the pivot point methods is that it's quite easy to understand, and use. Plus, it's pretty versatile as well because it can be used on any financial market, so stocks, Forex, commodities, or even your crypto. And it has, as we mentioned earlier, predictive power as well, since it provides forward-looking levels based on historical data. Of course, it's not always accurate since they are based on past data, and may not always predict future price movements. So that's why, as I mentioned earlier, you do need to combine pivot points with other technical indicators like your RSI, MACD, in order to confirm the signals. Okay, let's move on. So now let's talk a bit about what are the effective time frames for you to use the different pivot points. So just overall as a general point to note, here we have an example of an unclear market structure on our 15-minute time frame. So you can see it's quite messy. There's no clear movement in price. But when we change it to the 1 hour time frame, you can see the highlighted portion has a much clearer movement. So overall, there's two criterion that you should be looking out for. Here it says Fibonacci retracement, but this works for any method that you're using, including your pivot points. So firstly is a clear swing low or swing high. Secondly is a clear trend between the starting and the ending point. Then your Fibonacci retracement or your pivot point trading strategy, whatever it is that you're using is likely to be accurate. Okay, so the time frame formula for pivot point strategy, we typically will recommend intraday, which would be your H4 on a weekly basis or your daily if you are looking at a monthly time frame. Okay, that's about it for this presentation. Overall, the usage of pivot points is more like a support to your existing trading strategy. So as we mentioned, just to summarize, you can use it for support and resistance levels. Also for intraday trading, like we're talking about here, since um since they solely rely on the previous day's data. So that's why it's more effective for intraday trading. And I guess another usage is market sentiment. So if the price is above your pivot point, it's often considered bullish, but if it's below, then it's considered bearish. Okay, that's it for our slides. Now let me just pull out our charts and then we can take a look at how exactly we can use pivot points. Okay. Um, Let me just check if you guys can see my charts. Should be all right, I think. Yeah, okay, great. So let's go ahead and get started on how to use your pivot points. So as I mentioned earlier, this is mostly used as a support for our trading strategy. So let's go ahead and analyze this as we normally would first. So on our weekly time frame, you can see this is our DXY, by the way. Price is generally heading upwards. There's been a slight reversal at this double swing high here. Now on our daily time frame, you can see this reversal even better here. So this would probably be my first resistance. And my first support, maybe just at this swing low here. Okay, maybe as a second resistance just up here. And for my second support, maybe at this swing high. Sure. Okay, so this is on our daily time frame. Now let's pull up our pivot points and see if they support these indicators. I mean these horizontal levels. Mm, okay, so you can see here we have the Fibonacci pivot points that we talked about earlier, pivot points high-low and pivot point standard. I'm just going to look at the standard for now. So this is on our daily time frame. So I'm going to change the settings here to our monthly instead. Okay, and also um you can also control the number of pivots that you want to look at. I'm just going to focus on the first and second support, as well as the first and second resistance, and of course the pivot point. Okay, oops. This should be on our daily time frame. As just to go back, these are the inputs that we use. So since I'm looking at the daily time frame, we'll be looking at monthly. Okay, and you can see my first support lines up nicely with our first with today's pivot point, and also the previous resistance. Our first resistance lines up with R2. You can also see our second resistance lines up nicely with these R2 levels. Okay, our second support, second support lines up with this pivot point here. So you're basically looking for levels that have more of these pivot levels lining up with your horizontal levels. So if I were to place it maybe somewhere here or somewhere kind of in the middle of nowhere, maybe over here, we wouldn't really see that many pivot levels or support and resistance levels lining up in this area. Okay. So pivot points, especially if you're a day trader, are mostly used to determine levels of entry, stop losses, and profit taking. So that's what we're doing here. Okay, any questions so far? I think it's pretty straightforward. Okay, so let's just go ahead and continue analyzing this like we would normally. So I'm gonna go in and pull out my Fibonacci levels. Okay, I'm gonna get rid of this for now because it's a bit messy. So I'm going in with our Fibonacci retracement first. You can see our 23.6 lines up with our second support, or first support rather, and the 38 lines up with the second support. Okay, now going in with, I think we might have a Fibonacci extension here. So yeah, you can see my 127 and my 161 line up with my first and second resistance. Okay, so in case you're not familiar with what I just did, this is a Nike tick, or what we call a Fibonacci extension. So it's basically this Nike tick kind of shape. If it's inverted, it'll look something like this. Yeah, and you're just basically taking this first part as your Fibonacci trend line, um, and then you're projecting it upwards. So you can see my 127 and my 161 both line up with the first and second resistance. Um, yeah. So this method basically uses the levels that are greater than 100%. So you can see I'm using the 127 and 161 here. That those are normally the levels that we normally find to be the most effective. Um, yeah. Okay, I think we might have another projection here. Or okay, no. Even though 100% lines up with our first support over here, we can't use it anymore because price has already broken out of that. So I'm gonna just remove this. Mm, hey, my 61.8 lines up with my second support. If we zoom out, let's see if our Fibonacci retracement. Okay, we have a 61.8 that lines up really nicely here and a 50%. Okay, so it's even better if you can find pivot points as well as Fibonacci levels lining up with these horizontal levels, because then you get the graphical aspect, and all of the technical aspects as well. Okay, I'm gonna put this back. Maybe we'll remove our S2s and R2s. Actually, no, we'll keep the R2s. Okay. And looking at some other indicators, let's look at. Oh wait, earlier I kind of mentioned that the if prices are moving above the pivot point, that's considered a bullish sentiment. So recently, let's try and zoom in and see. The most recent pivot point is over here, in line with our first support, and prices are moving above that. So that is a bullish sentiment. So that also supports our analysis. Um, let's see if we have an ascending trend line here. Okay, we actually also have an ascending trend line over here. So overall, pretty bullish signals. So let's take a look at Ichimoku, MACD, Bollinger Bands, and see if they support our analysis as well. Okay, now it's getting a bit messy. To start off, let's look at Ichimoku. So prices are moving above the cloud. So let me just get rid of this. So for Ichimoku, we normally just like to look at the cloud. It's just the easiest. So prices are moving above the cloud. That is a bullish signal. But MACD, you can see, is giving us a little bit, yeah, quite a bit of a bearish momentum. So that doesn't support our analysis. Next, let's look at our Bollinger Bands. So prices are kind of pushing above the upper half of our Bollinger Band, but that doesn't really tell us that much right now. So I'm going to remove that. Let's look at our moving averages, EMA, SMA. Let's also look at RSI and stochastic. Okay, so you can see prices recently crossed over the upper band. Um, Not upper band, the both of the moving averages. So it crossed over, that's also giving us a bullish signal. Okay, however, on our parabolic SAR, you can see prices moving below that. So that's doesn't support our analysis. Okay, on our RSI, I think we might have an ascending trend line here. Okay, yeah. Prices are moving in this ascending trend line. Not so much on our stochastic, but on our stochastic, we do have these hidden resistance, hidden support levels, I think. Okay, yeah. So if you look here at each of these levels where stochastic has dips down and bounces off this level, prices actually shoot up afterwards. Here as well. And you can see prices recently bounced off this is stochastic, our stochastic. So we're also expecting that bullish movement over there. Okay. My trading view is a little bit laggy today. Um, not sure why, but yeah. Let me know if you guys can't see or it's not clear. So if I add back our pivot points, you can see it's a lot more messy, but we but the R1s um also match up with our first resistance, so that gives us quite a bit of confluence along with the 50% retracements. You can see the our second resistance as well. And our pivot point lining up nicely with our first support is a good sign as well. Okay, so that's kind of how you can use your pivot points together with other technical indicators and also with not forgetting Fibonacci and also your graphical indicators. And this indicator, we're just using the standard one. Okay, so specifically, I just want to highlight again one more time that using pivot points together with your Fibonacci retracements, like what I did here, is really important. Not just relying on one of them, especially if you can find levels like this where your pivot point levels line up exactly with your retracement levels. That's super helpful. Okay, that's for DXY. Next we'll look at gold, or if you guys have any other requests, let me know as well. Okay, we have a question. Can we download the presentation somewhere? I'm actually not sure um about that. This session is being recorded, so I think if you just email the IronFX team, they'll be able to send you the recording, or maybe they'll upload it somewhere. I'm not too sure. Let me just show you um yeah, the support email. Just ask them and then they can help you out. Okay, now let's look at gold. Okay, just give me 1 second. Okay, so for gold on our weekly time frame, maybe this time let's analyze this on our H4 so that we can look at the other settings for a shorter time frame. Okay, so on our weekly time frame, prices generally heading upwards. Oops. You can see there has been a slight reversal here on our daily time frame. You can see prices moving upwards as well. Let's maybe briefly go in with some support and resistance levels. So here would probably be my first resistance. Um, I would place my first support here. And hmm, mm, maybe a second support just down here. Okay, so now just to check again, I'm going to go in with my pivot points. Go into our settings, labels. I'm going to get rid of the others and just focus on the S1, S2, and pivot points. And then for the pivots time frame, since this is our daily time frame, we're looking at our monthly time frame, monthly pivots time frame. Okay, so you can kind of see this entire area where our first support is at lines up with a number of pivot points and support levels. Uh, I might actually move our second support up here instead because it lines up with more support levels here than it did down here. Down here, it only lined up with one pivot support level here. Okay, and for my second resistance, you can see it also lines up with a number of resistance levels, so I'm happy with that. Okay, now let's zoom into our 4-hour time frame and repeat the process. Now on our 4-hour time frame, prices generally are moving upwards, looks like. Okay, this is my first resistance. Okay, but there is a bit of a resistance here, so we might see prices drop. Okay, let's analyze this a bit. This is my first support. My second resistance. Mhm. And my second support maybe just down here. Mm, yeah, okay. Now going in with our indicators again, I'm just going to look at our pivot points. So now that we're looking at the H4, instead of monthly like earlier, we are going to look at our weekly time frame. And again, I'm getting rid of the other levels. Okay, so look at our first resistance. We have quite a number of levels lining up. Okay, and then my second resistance, we also have a number of resistances and pivot points lining up there. First resistance, yep, we have a pivot point that lines up nicely. And some resistance levels as well. I think I'll leave that. And then for my second support, we also have some swing lows lining up with the support S1, S1 here, also lining up. Okay, so I'm quite happy with these levels. Now I'm going in with our Fibonacci levels. Okay, I don't have any levels lining up here. You can see my 50% does line up nicely with my first support, but price has already broken out of that, so I can't use that anymore. I think my 78 might be quite close, or maybe I'll move it down. Let's look at our pivot points and see which levels work better. Here or up here? Mm, okay, I think it might work better here since it's in line with a Fibonacci level. We also have a pivot point here that I missed earlier that's lining up as well, along with in R1. Okay. Okay, I'm just gonna keep that 78.6. Now going in with our projections. 61 lines up. Okay, 78 is a little bit far, so I'm just gonna keep the 61. And then for my Fibonacci retracements, again, we might have a Nike tick. Okay, not really, because price has already broken out of this 161.8, so we can't use that anymore. Okay, and next for our another retracement, 38.2 lines up with our first support. Yeah, I think that's it. Mm, yeah, I think that's all. Now let's pull out some. Oh wait, we might have another projection here. Maybe a 78. Yep, 78 lines up nicely with my second support. Okay, now going in with indicators again, starting off with Ichimoku MACD. Okay, so Prices are moving above the cloud, which is giving us a bullish signal. MACD is also giving us a bullish signal. Okay, let's look at Bollinger Bands. Bollinger Bands, you can kind of see prices pushing above that upper band, which is also giving us that bullish signal. Although there is a bit of a reversal here. Okay, I'm just going to highlight this area here because we have a bunch of um, pivot points that line up there. Oops, this should be red. Okay, and we also have some swing lows and swing highs lining up in that area. So we could actually be seeing prices reversing off and heading downwards. But again, let's look at other indicators to see what they say. If we look at our pivot points here for today, prices are moving above it, so it is giving us a bullish sentiment, which is what our Ichimoku and MACD are also showing us. Let's maybe look at our moving averages, parabolic saw. Okay, they're all giving us bullish signals as well. You can see prices moving above all of the indicators. And let's look at our RSI and stochastic as well. Okay, they're all pretty bullish as well. Yeah, off with prices moving kind of into that oversold region a little bit. Okay, so we could be seeing prices continuing upwards, but just be careful of this first resistance area here. Okay, let me just... So depending if prices are strong enough to push past this resistance, but from the looks of it, looking at our indicators and also the general trend, looks like prices might have enough bullish momentum to push it above this first resistance. Okay. Okay. Are there any questions or any other requests? Okay, if not, that's all I have for you guys for today. Thank you guys so much for joining me. I hope you guys found this session helpful. And I'll stay back for a couple minutes if you guys have any other questions. But if not, yep, thank you guys so much. Have a great rest of the week, and I will see you guys again next week. Thanks, everyone. Bye. Thanks, everyone. See you guys.